Welcome back to another episode of the Block Runner Podcast. I'm your host, William, always here with your co-host, Iman.
What's going on, dude?
On the sticks, we got TJ.
Hello.
All right, so of course we're going to be talking about NAT, dude.
I don't even think we need to preface any episode with that anymore.
Yeah, everybody's waiting for us to have a long conversation on NAT.
Right. Or we could talk about something else. You know?
Like the Strait of Hormuz?
Yeah. World War III updates.
Yeah.
That's always important, right?
Back to Iran, missile strikes.
Yes. Place your Polymarket bets now.
Yeah.
Are we going to be open or closed for the weekend?
Yeah.
I guess we won't know because these episodes,
they happen
as straits are opening and closing. Right.
Yeah, it'd be cool to see what it's like on the inside, just like the conversations. Like, boss, are we opening it today? It's like, no, not yet. I'm still on the call.
Yeah, it's more like Baron Trump. It's like, Dad,
it's
like, can you open it today so I can make, 100 milli?
Yeah.
It's like, all right, son. Or I guess it's not. Yeah, can you make the phone call to Iran and say that, we're settling on a deal?
Yeah.
So that they open it up. Something like that. I think that's the chain of causation there. It's like Baron Trump.
Yeah, you would think that these insiders who are making the calls and puts and being, successful at a 100% clip would get a phone call by the SEC.
Oh, yeah.
But they don't.
No.
I mean, aren't these like exchanges like KYC and all this stuff? Like,
yeah, I don't think there's anything illegal happening here, I guess. It's just.
Well, it's insider trading, no?
Okay, maybe there's something illegal happening here. I don't know. It hasn't been proven, right? It's just assumed to be because every single time there's an open and close moment, there's like a ginormous oil futures bet placed like minutes before, right?
Yeah, so I don't know where this is happening because I just don't care, right?
Yeah.
But I would assume because nobody's been caught that it's like on these decentralized like services.
Like Hyperliquid?
Yeah, whatever's available for this kind of stuff.
Yeah, it could be. Yeah. It's the reason why Hyperliquid's so popular, right?
Yeah.
Yeah, so who knows? But yeah, we're not going to talk about that. Even though we kind of just did for like a few minutes. But yeah, a lot is happening in the NAT sphere. NAT sphere? The Nativerse?
That's right.
Which one? Doesn't matter. And
the Natscape.
The Natrix.
That's it.
No, there's more. There's more like mythical lands
world.
Out there. What's the Lord of the Rings?
I have no idea.
I was gonna say Natzaroth.
Nazaroth?
Azeroth. That's a World of Warcraft thing. But yeah, it's a lot happening, and we have a lot of things, I guess, to kind of like react to.
Yeah. So I guess the first thing I'll say is like the NAT token got listed on Mexi, LBank, and CoinEx. CoinEx probably the most interesting one just because they are, I guess it's owned via BTC.
Yeah, I mean, they're all pretty interesting to me. Because we spent a lot of time trying to aggregate, like, remember those days, guys? Where like we put like a donation page on the NAT GMI site, right? Trying to crowd.
Still there.
Yeah, it's still there.
Still the same number.
Yeah, we're doing a great job.
Yeah.
Because the reality is like typically you've got to deliver these fine folk a suitcase or briefcase full of money.
Yeah, That's
and
how
then
you
we
do
were
business.
we were confronted with that was the reality of the situation, right? But
yeah.
Somehow those loops have been
lifted.
Yeah.
Yeah. So we didn't pay.
Not a dime, dude, which is crazy.
Yeah, I don't know of anyone who's paid.
I don't either.
And I don't think anyone has paid.
Definitely didn't come from me. I could vouch for that, dude.
Just like, man, if you give me your Nissan,
yeah, that's collateral.
For sure, yeah, for sure we'll list.
Yeah, I don't think that's gonna fly in any country or zone or anything, dude. So I don't know how it happened, other than we've heard of stories like this happening. Somebody in the community, I think it's Deployer or Decoder, somebody.
Oh, Decoder,
like
yeah,
maybe Deployer. That he recognized, like, you guys are on a similar trajectory to Const in like early days of Tau.
That's right. Yeah.
I was like, what do you mean by that? It's like, well, he didn't like pay any centralized exchanges to list Tau. It's like he more so put it on the DEX first, built the community, built like organic traction, and then like the exchanges took notice of that and eventually just listed it. It's like, you guys should probably do something similar.
Yeah,
He
this
made
was
that suggestion like 6 months ago.
yeah. He said that, and that was a reply to Const
That's right.
adding us because Const was saying starve the exchanges, don't pay them anything.
Yeah, that's what it was.
Yeah.
And here we are. I guess they're starving a little bit. I don't know.
Yeah, because apparently we're in the bear market, so they're finding substance, I guess. Whatever has traction, like let's do it.
Yeah. I mean, I love it, dude. So that was definitely unexpected for sure.
Yeah, it was. I mean, it was 3 exchanges overnight. There was a 4th one that happened the next day.
Lbank,
No,
Coinex, Mexi, and then
there was a 4th one. Did I add it? I don't think I even added it to NatGMI. Oh no, I think I did not.
okay. Well, they're out there for sure.
Coinex. Damn, I can't remember who it is now. But there's a 4th one.
Okay.
So yeah, they listed it, and then the token went to what, close to 150 million.
Yeah, almost in an instant, I think.
Yeah.
I'm not sure what the full maybe it was it Coinex listing that was first, and then because Nat was
Yes.
flirting like around 80 million market cap.
Yeah. So
Something happened, and then it just completely went ballistic.
Spider Pool distributing NAT. That was the thing that sparked everything.
Yeah, but it was like flirting. Well, there was like a giant candle where it flipped Ordi like overnight.
Yeah, I don't know what. I
think it was an exchange listing because I was on the verge of like falling asleep.
Oh.
And I was sitting there watching my CoinGecko in my bed, waiting for the market cap of Nat to be higher than Ordi. I was sitting there for a few hours,
Yeah.
waiting for that so I could take the snapshots,
Yeah.
put it out there on X. It's like,
You gotta have the receipts, dude.
yeah, I was like, please, dude, I'm trying to sleep here, anytime. And then boom, an exchange announced something, and then it went straight up.
I find it weird that they all did this all at the same time.
Oh, I find a lot of things weird about what's happening, but yeah, it is definitely weird. But again, it's part of the reasoning for this God candle experience, right?
Yeah, I was going to do this, but I didn't get a chance to. But I was going to go to one of our videos and show some random timestamp that the NAT token's market cap was below 3 million for like a while.
For like a year, right?
I don't know about a year. It's been like up and down, but
yeah,
it reached like 2.5 million to 3 million. And then it reached at 150 million. So what? Well, this token is going to be extremely volatile for a while.
Yes.
And so if it reaches 150 million market cap, you can expect it returning back to its like normal-ish kind of market cap, right?
Yeah, whatever that ends up being now.
Yeah.
The new normal is 40, 50 million, 60 million, who knows? Right?
Yeah.
That's a good normal.
Yeah, so that's down 66%. Right, in that normal situation, if it goes 70%, 80%, right, doesn't really change the fundamentals.
No, it's just how crypto tokens behave. This is how all assets behave, and yeah, crypto is very volatile. So,
especially tokens like this. I mean, there's no market making. There's no there's no manipulation to any degree. In order to manipulate this token, you need to buy a lot of it, and so that's gonna like shoot up the price itself.
Mm-hmm.
So that's what you should expect with this token. So be paying attention. I'm sure other things are going to be happening over the next few months that are very good for the token. But the mission is the same. The fundamentals are the same, and Bitcoin has a security budget problem.
Yeah, and apparently there's some chatter abroad about this.
Abroad? Like on another...
Like beyond us?
Yes.
Like abroad, like, out there.
Yeah, so obviously we didn't discover this issue. We weren't the first ones.
Well, that's one of the accusations, I guess.
Yeah.
That we've invented a problem.
I could see how one might think that. Right, because that's how you market things. Like, sell me this pin. I was like, okay, sign your name. It's like, well,
yeah,
I don't have anything to write with. It's like, I'll sell this for $100 million.
Right. Yeah, but that's not the case here.
No, definitely not. So, for example, Bankless is talking about the Bitcoin security budget issue and one of their talks. This is like about a minute long, so I'm sure the conversation was about many other things. But what's interesting is if you know Bankless, they are Ethereum aficionados.
I would say so.
And they really like Ethereum, so much so that they use the security budget issue as a catalyst to say Bitcoin has a problem. That's why ETH is going to overtake it and be better and all this stuff, which is a fine thesis. I think that's an okay thesis. But what is also okay is Bitcoin has a problem and you find a solution for that problem. Right? So that's totally okay. So let's listen to what this guy says. All right, here we go.
It was actually your original kind of Ultrasound Money podcast with Justin Drake that kind of convinced me, because I was like a pretty strong Bitcoiner at the time, and I didn't own any ETH. And I listened to, because I like to hear like different arguments or views that oppose my own. And I was listening to that, and I was like, actually, that's a really good point. I have no idea how Bitcoin is going to solve the declining security budget, right? Like there's really two options. It's like you add tail issuance where you remove the 21 million hard cap, or you move to proof of stake. And in that scenario, you kind of just sacrifice your number one advantage to Ethereum, being that you don't change, right? So once you change it, you might as well just add smart contracts too, right? Which was Satoshi's actual original vision. And then the deeper I went, so right, like that's kind of like a good example of, I didn't view ETH as money until I kind of listened to you guys make very compelling arguments. And I was like, oh, the more I thought about it, like ETH actually might be superior to Bitcoin on like some like the most important properties. And then as you kind of like learn more, you, right, like I swapped all my Bitcoin to ETH. So you kind of see that spread of an idea be reflected in the market price as well.
Modern media is a...
All right, so he watched Justin Drake. He says Justin Drake is like a researcher, and he says that Bitcoin has a security budget issue. Bankless, they agree. And the security budget issue is a real thing. Like it's you can independently go and check it out, and you will come to the same conclusion that it would be very difficult to sustain Bitcoin's value proposition if there's a lot less incentives to maintain the network.
Are you going to do the calculator exercise to kind of...
I would like to, yeah.
I feel like we should, because, yeah, once you see it and, like, kind of live through the numbers, I guess.
Yeah.
It's kind of shocking that this isn't more widely discussed or, like, understood or just, I don't know.
Yeah, I agree, because when I was first getting into Bitcoin and understanding and reading the white paper, I understood 50 Bitcoin, it halves the 25, it keeps halving. And halving means an exponential decay. So I was like, well, that means the price needs to exponentially grow for things to make sense. And so I think that's the premise that people start with. I feel like it. But if you don't really understand what it means that you have exponential decay, then you sort of like brush it off like it's no big deal and that, you know, it's fine. Mm-hmm. When it's actually not fine. So the exercise that we did this morning was I asked the guys here, Iman and TJ, it's like, what if I told you that Bitcoin got to 100 trillion? And I asked both of you guys, you know, how long do you think it would take? Like, just give me a number.
Right.
How many years?
I said 100.
100 years. And TJ?
I said closer to 50.
50. So, and I said, all right, let's do 30. So 30 would be a pretty, you know, hype situation for Bitcoin, right? So if we do 100 trillion, so I'm going to zoom into my little calculator here. Maybe I can, actually, I don't want to make it bigger because it'll be harder to read. So I think you guys should just follow along. Not you guys, but everyone listening. Just pull out the calculator and type in 100 trillion. So that's a million, that's a billion, that's 100 trillion. So if that's the market cap of Bitcoin, then how much are each Bitcoin? So you divide that by 21 million. So 21 million. And then you get $4,761,000 per Bitcoin. So that's 100 trillion market cap. So now each Bitcoin is worth 4.7 million. And we said 30 years. So how many halvings are in 30 years?
It's like roughly 8, right?
Let's do 7.
Okay.
So that's 28 years. So we'll give it 7. That way it makes the math kind of a little bit easier.
Okay.
So we take today's security budget, which is 3.125 Bitcoin, and we divide it by 2 because it halves 7 times.
Correct. So
Right.
you're going to need 7 twos.
7 twos, right? So divided by 2, that's
And-
1 time. Go ahead.
And the 3.125 is how many Bitcoin are in each block.
Correct. Yeah. So 3.125 is how many Bitcoins are generated and sent to a miner who wins that block.
Today.
Today. And it used to be 50. And so we've come through 4 halvings, and now it went from 50 to 3.125. So now we are dividing it by 2 because we think that it could reach 100 trillion in 30 years. So that's divided by 2. That's 1 time. That's 2 times, 3 times. That's 4 times, 5 times, 6 times, 7 times. So now you're left with here, this number here, 0.0244, is how much Bitcoin is being generated per block in 30 years, right? So if each Bitcoin is worth $4.7 million in 30 years, which we think is conservative, or not conservative, actually very ambitious,
Yeah.
right? Then you multiply 4.7.
Well, it's conservative compared to Michael Saylor, though. Yeah.
It is conservative compared to Michael Saylor, yes. And we'll
He's-
do the math too.
Okay.
So that is delivering $116,000 per block, right? And so we're missing context here. So $116,000 per block, what is it today? So now we can go and do real-time research, go to mempool. And if you click on this block here, the latest block, and this will show you subsidy plus fees. So total fees was 0.01 Bitcoin, and then we know that 3.125 is the subsidy of Bitcoin right now. So you add these two together, and you're getting $243,000 per block. $243,000 is almost twice as much as in this scenario.
I think it's more than twice, but yeah, it's more.
Yeah,
Which is you would expect it to be the other way around, right?
right.
As
So-
the value of Bitcoin increases, like the security should also
increase.
at least you would hope so. But
It's not even you would hope so. That is how it works.
well, it's how it should work. It's how the perception of the value of Bitcoin should correlate to that. Or at
It
least-
should. So let me take that back. It's how things have worked in the past. The bigger the thing is, the more valuable the thing is. You tend to spend more money on securing the thing, right? That it correlates, meaning more value equals more required security. So in this case, we have an extremely valuable network at 100 trillion, and it's delivering less than half of what it's delivering today. So there's more context to this. So what, right? They're still getting $100,000. It's still Bitcoin. So what? The so what about this is that the value of Bitcoin is directly correlated to the security of Bitcoin. So why is that like a shocking thing? Because if you were to take Bitcoin today and just take it as it is today, right? $1.5 trillion, but it was being secured by just one laptop, right? Your laptop is securing the whole network. And what happens is the difficulty adjustment adjusts all the way down so that your laptop can produce blocks every 10 minutes. So functionally, Bitcoin operates exactly the same, meaning you can submit a transaction 10 minutes later, hopefully it gets mined and everything's okay, right? So when you talk about difficulty adjustment, you are talking about the resilience of Bitcoin to maintain online presence. So that has nothing to do with security. So if I were to tell you that Bitcoin is being run on one laptop, do you feel secure? Yes or no?
negative.
Okay. So you don't feel secure. So then what do you need to feel secure for Bitcoin? You would need lots of laptops scattered throughout the planet, right? So fundamentally, you just said you need more energy consumption in order to have high security for Bitcoin. So that means that if that is true, then the more energy you consume, the more security Bitcoin gets. And so in order to consume more energy, you need to be incentivized to consume more energy. And that incentivization is in the form of capital. And so if you are making less capital, you are less incentivized to secure the network. And if you turn off rigs, things get less secure, and therefore the underlying network is less secure.
Which is what's happening here. So then how come? So basically, people haven't run these calculations, or?
So the counterpoint to this would be like, well, the fees are going to go up.
Yeah, that's the big one.
All right, so let me look up just so that we're all clear here. So let's go to Boomertown and go to google.com, right?
Well, it was in there too, right? Like the mempool. You saw the fees. They were very
Yeah,
negligible.
but the fees, that's today, it's 0.01.
It's true.
In the future, it's going to be an infinity dollars in fees, right? So how many transactions can occur in Bitcoin today? So 500,000 to 600,000 transactions daily on Bitcoin. So that's the transactions daily happening on Bitcoin. What is the maximum transaction size? Total transaction rate of Bitcoin.
I didn't think you were gonna go this deep, dude.
Well, we have to go super deep.
Okay, I'm with you.
So I think the transaction rate is like 7 to 10 transactions per second, right? So how many seconds are in a minute? 60 times 60 minutes times 24 hours times 365 days. So that's 31 million seconds times, let's say 10 transactions per second. That's 315 million transactions in a year, right? So 315 million transactions in a year. And let's say, what is a reasonable percentage of the market cap for security? Like what is, so we could do the other version of this is like, let's take 100 trillion market cap, and that's delivering $116,000. So let's take $116,000. Let me take this value, and that's how much money a miner earns with the Bitcoin subsidy at 100 trillion market cap.
Mm-hmm.
So that's per block. There's 144 blocks per day times 365 blocks. So the total revenue for the collective miners in a year is $6 billion. $6 billion.
Down from today's 20 billion.
Correct.
Yeah.
So that's $6 billion. So what percentage of that is from the total market cap, right? So we divide that by 100 trillion, and the percentage is 0.00006%.
Yeah, that seems like a problem.
Right. So now we're in a situation where we're spending 0.00006% of the total market cap to secure the network. So let's assume that was fine, right? Even though it's clearly and obviously not fine. But if we were to take that to be fine, then you would multiply the total transaction rate. So you would multiply, so you would divide by the $6 billion, divide that by 315 million. So this is the total value of the network security. So let's assume that this was okay to spend, and divide that by 315 million transactions, and you get around, let's say, $20 per transaction. That's how you would need $20 per transaction in fees in order to equal this security budget, which is basically nothing, right? So now let's say that you were wanting to actually have this number to be closer to actual security. And let's say you wanted 3%. And so I say 3% because if you go and Google how much does the US spend on the military? And you get roughly, US military budget. So this is the issue with doing like real-time research.
Yeah, but people have to see how it's done, right?
Yeah.
You got to do some. And this is what I mean. This is the reason why this isn't widely discussed in crypto zeitgeist culture or whatever. It's
doing
either
the math.
because people don't want to go through this, or so the people who have done it, they I don't know, don't feel some sense of urgency to try and figure this out. Assuming
Yeah.
they've seen this and they identify it as a problem. And the proposed solutions up until now have been,
Yeah.
very disruptive to the value thesis of Bitcoin. So therefore, it's probably best we just kind of not bring it up at all, right?
For sure. Yeah, because this is a very difficult thing for people to digest, and then really, what do you do about it once you understand, right?
Yeah. So for those of you guys, I guess, new listening, I'm sure there's some of you just who've caught wind of NAT for the first time and trying to understand what it is, and it's what NAT GMI is for.
Yeah.
It's a good resource, and there's others out there. But yeah, we've been discussing this for a couple years now.
Yeah.
Or just about. Right?
Yeah.
So yeah, we've looked at this problem from many different angles and tried to understand what else could be done
For sure.
besides something like a second subsidy, right?
Yeah. 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 I mean, ultimately, it's like we have to take what exists today and apply it to Bitcoin so that we have an idea of what the target is for like a level of security. And so the best thing to compare Bitcoin to is if Bitcoin's security goes up, the value of the network goes up. So everything is completely dependent on the security. What is that like? That's kind of like the United States. The United States spends more money year over year on security, on the military, to protect its assets, right? The people, the world's reserve currency, that's what they spend on. So how much of their GDP do they spend on the security budget of the United States? Well, it's between 3 and 3.4%. So if that were the case, then we would need to spend 3 to 3.4% of 100 trillion market cap in order to feel equivalently as secure as the United States feels secure. Like, isn't that like a reasonable kind of logic?
I think so. I think it's more of like whether or not your senses are attuned to, threats or danger or not, right?
Yeah, I mean, ultimately, the value of Bitcoin is just the security of it, right? And if Bitcoin is being protected by a single laptop, it's not very secure.
Yeah, but that's not what's happening, right?
No, it's not. But that's my point, is that it's not secure if it's secured by one laptop. Right. So then you need many more laptops and computers and, hashing machines in order to feel secure, right? And in order to have that, you need to be incentivized to spend the money to have that online. Because as soon as that money goes away, the systems turn off.
Yeah, which is a likely outcome. And another scenario we kind of like pointed at in the NAT paper.
Yeah.
And another one was in the event of that happening and Bitcoin is to become like an actual macro asset where there's like national security interest.
Sure. Yeah.
Wasn't there like some admiral lately who said something about the United States is...
Yeah, Admiral's running a Bitcoin node to try to figure out ways to use the Bitcoin network to protect systems, online systems. And so they're experimenting, right? So if you were to take $100 trillion market cap, and if we use the United States as a guide on the degree of value to security spend, which is 3.4%, let's apply that to Bitcoin, right? So if we multiply $100 trillion market cap, so let's multiply $100 trillion market cap times 0.034. That means that the miners need to make $3.4 trillion, right? And let's assume that it's the year 2140, and 2140 there's zero subsidy, right? And we all agree that $3.4 trillion is enough to secure a $100 trillion asset. So then you divide that number by transaction rate, and that's 315 million transactions per year. And you're asking people to spend $10,781 per transaction to equal what we think is the ratio of security that's valid to secure a $100 trillion network.
Yeah.
So then what does it mean to spend $10,781 per transaction? Who's going to be using the network where a transaction costs almost $11,000? Right? It's probably just the United States, probably countries. They're moving, billions of dollars here and there. And it's like $10,781 represents what a transaction needs to be for every transaction with every block filled forever, and the transaction price needs to increase if the $100 trillion market cap increases, right, to maintain a 3% ratio. So ultimately, clearly, what I'm suggesting here is that fees will never be enough to actually achieve a good ratio of value to security.
Yeah. And even if still, what's so wrong about just adding some kind of like supplemental angle to all of this?
Yeah.
In the event that you end up being correct, right? As opposed to being complacent and doing nothing and just assuming the best case outcome.
Yeah, for sure. I mean, that is our thesis with the NAT token, right?
Yeah, but it's more of like a statement for people who seem to oppose it for any reason, right?
Yeah. I guess, we'll get to the NAT part, but I want to make sure that we're all on the same page on the ridiculous notion that fees will be enough to secure the network.
Yeah, so basically you're showing the numbers where that's mostly not feasible.
Yeah, and so the assumption here is that we must all agree that the United States spend, which is 3.5% of their GDP goes to security. Mm-hmm. And we need to agree that is a reasonable enough ratio to apply to Bitcoin.
Yeah.
If that is reasonable, then at $100 trillion market cap, you need $3.5 trillion, $3.4 trillion.
Right. Yeah. So then we should be working towards that goal, is what you're saying.
Yeah. So I think if we spend 3% of Bitcoin's value for security, I think that's good, because whether it gets to 100 trillion or 200 trillion, if you maintain 3%, miners are making more money, and when they make more money, they spend it to where they're incentivized to spend it, and that is securing the network.
Right.
Because it's reflexive. If the network is more secure, the network's value is more valuable.
Mm-hmm. Yeah. Well, again, not everybody sees eye to eye, dude. And yeah, it's a reason why these bankless guys and I guess other people in the Ethereum community, they seem to not have a problem, I guess, bringing up these types of realities.
Yeah, well, so their position is clearly, they've done the math. They understand that there is an issue. They may not understand it to this degree where they've done like the nitty gritty of it, mm-hmm. but they know that it's an issue. So what they're saying is, well, Bitcoin is destined to fail.
Yeah, they're weaponizing it for their own bias.
Right.
Yeah, that's not, but as opposed to figuring out some sort of solution at the end of the day. Like that's what NAT does.
Correct.
It's identified the same problem.
Yes.
But it's not spinning up some sort of like, oh, because Bitcoin has this flaw in its, security design.
Yeah.
Let's just spin up a whole new chain with a different design or whatever.
Sure. And that's a completely fine, kind of like rational approach.
Fine. It's already been done to hell though.
It has, yes.
We've been experiencing that pivot in human effort, I guess, for the last decade or so.
Yeah.
This is for the first time there's a token that's directly addressing the problem instead.
Yeah.
Right? That's the novelty, I think, of why NAT is so interesting and it stands out in the market, right? When is the last time there's been anything adjacent to Bitcoin, really? Other than like the Bitcoin ecosystem and its flourishing moments, ordinals, then BRC20s and all the other tokens.
Yeah,
so like vehicles adjacent to Bitcoin, right?
Yeah, ordinals and kind of like the fees that occurred due to ordinals and runes, like that was playing into the hands of the people who believe that fees are going to solve the issue, but yet it's being called spam.
Yeah.
Like, I thought this was a permissionless network. You could just use it for however you want to use it. If you want to send pictures around, that's what you want to do with it, right? And they're paying access for the network, right? They're already paying. And so the fees went up, and that is the thing that's supposed to secure Bitcoin, but yet they hate it.
Yeah, it is a little weird.
It's weird, right?
Yeah.
And so what's more weird is like Pierre Rochard. So he replied to this tweet. He was like, I can't believe people still believe the security budget hoax.
Jeez.
And so, like, we just went through the math here. It's like, how is this a hoax?
Yeah. Well, they'll bring up the whole, okay, yeah, Bitcoin is designed to accommodate these types of scenarios, right? Difficulty adjustments.
Yeah, so, but that is confusing what a difficulty adjustment does. It just maintains the 10-minute block time. It just maintains it. And the hash pool is just a pool of if you contribute a percentage to the pool, you get a percentage of the blocks. That's it. So if you turn off your system and you keep yours online, your percentage of the pool gets bigger. And so I just disconnected from my network, and now it's only you and TJ. So it went from 3 nodes, 3 miners, now down to 2. What is another way of saying that? Centralization.
Yeah.
So then if we get to the point where only the United States or only China or United States and China are the only ones mining Bitcoin because it's a geopolitical situation now, there's only 2 miners. How do you maintain value when there's 2 miners in the network? That isn't decentralization. We need to maintain that. So the way you do that is by incentivizing people to turn on their systems.
Yeah.
And you're not going to do that in a situation where the security budget is declining at an exponential rate.
Yeah. Yeah, like we're seeing, incentives are pretty powerful mechanisms. You know?
Yeah, I mean, you could argue that incentives is what drives everything.
For sure, 100%. It's what drives us out of bed in the morning, you know.
Yeah.
Separating ourselves from our families and such.
Yeah, the mortgage is coming.
Yeah, I got to go battle some wolves.
Yes. That's right. The hunger is coming.
Right, but in this day and age, the wolves a little different. It's like people on Twitter.
Yeah.
You're not actually out there in the fields, you know, with your kendo sticks, fending off, you know, wild monkeys and boars just to survive. But it's similar in scope as far as, like, you know, we're all incentivized to partake in this economy, right? So we do what we got to do.
Yeah, absolutely.
But yeah, so the incentive alignment of NAT, it's already proving itself to be pretty effective, right? It's not just coordinating community around this, it's actually activating a lot of, you know, again, like unexpected outcomes, like the fact that it just got listed on 3 exchanges overnight.
Yeah.
You know, not having to go through those, you know, standard industry loops to do so.
Yeah, the briefcase.
Yeah, the briefcase. And then the miners actually integrating into their dashboards.
Kind of a big deal.
I mean, kind of a massive deal, I would say. And like a lot of people have been pointing out on Twitter, it's probably like, you know, it's been like a conversion moment in their own like belief and understanding of like what NAT is actually about, right? The fact that there's actually a miner that's signaling to the entire network that there's a new incentive here. Yeah. It kind of triggers like a game theory moment, right? Where now it's like, okay, if you don't kind of follow in the footsteps of Spiderful, you're already kind of losing in a sense. Like, so you're you know, you're incentivized to kind of follow foot. So you can kind of assume these things will likely happen down the line.
Sure.
So this is where, you know, things are kind of traversing out of theoretical conceptual states to, you know, reality, right? And it's got a lot of people feeling some type of way, right? Whether it's positive or negative. And that to me is what crypto is all about. Those are the types of things we've always been looking for.
Yeah, 100%.
And it's harder and harder and harder to find like actually true gems of a crypto like that in this day and age, right?
Yes.
Something that's actually, I would qualify this as disruptive, right?
Yeah, 100%.
This is a real disruptive, you know, attempt at tokenizing something, right?
Yeah, and the psychology of it is probably the most like dangerous part of when it comes to a human psychology and money, because take a look at what happened here. Bankless, they're saying that Bitcoin has a security budget issue, therefore Ethereum is better, right? And so Pierre, he's responding with, I can't believe people still think there's a security budget issue, in response to the fact that ETH is the solution and Bitcoin is just like this thing that's going to die at some point.
Right.
And so now let's take a look at us, right? We launched this token. We're saying that NAT token is the solution to the security budget issue. So we're kind of like Bankless. We're sort of like saying Bitcoin has a problem. Let's go to Ethereum, and we're saying Bitcoin has a problem. Let's go to NAT. The difference is that Ethereum is a completely separate network that has no implications on the viability of Bitcoin.
Right.
Whereas NAT, if people recognize the problem and they recognize the solution, if NAT goes up, Bitcoin has a higher security budget. That is the difference. And so most people, when you hear Bitcoin has a security budget, buy my widget, they automatically ignore it because they assume that widget has nothing to do with Bitcoin.
It's true. Yeah. So you're kind of like dealing with a little bit of that. Like
Yeah.
The legacy of.
It's the psychology. It's like, it's just a knee-jerk reaction. It's like you make a problem and then you solve it with your own thing, right? And so so that's why I think, Adam Back, he saw what the NAT token was, just automatically ignored it without looking into it. And then anybody talking about the security budget issue is one that's trying to sell you something. That is the underlying interpretation of the security budget issue. And so those who disagree that something else is better, they're ignoring the problem, which the problem is mathematically sound, and they are ignoring any potential solutions because it automatically means you should do and buy this other thing.
Yeah. Well, so who knows where NAT goes from here? I mean, I'm expecting, a lot more people to become aware of this. I think we've grown in like a few thousand new holders.
Yeah.
Something like that.
Yeah. So I think it would be a good time to talk about the solution, right?
Which one exactly?
The NAT solution.
Okay. Yeah. If you want to go even deeper.
Oh yeah, we're gonna go deep. We're gonna explain it all here.
Okay. Yeah, let's do it again, dude. Let's run it again.
So I guess I'll pose the question. This 100 trillion market cap sounds like a lot of money, right? Because right now it's at 1.5 trillion, whatever it is. But Michael Saylor is saying something else. He's saying he's using kind of like the meme numbers is, each Bitcoin will be worth $21 million in 21 years.
Right.
So we can do that math, and we sort of did earlier. And long story short, if you take I guess we could do it right now. So if we do 21 million Bitcoin times 21 million, so we're taking Michael Saylor's prediction of Bitcoin.
Yeah, which I think is relevant, right? Because, he is kind of like the voice of Bitcoin in its current day, right? Before it was Andreas Antonopoulos.
Yeah.
But, he kind of served his calling and, he was the evangelist of his time, kind of like spreading the original core tenets of Satoshi. But that time seems to be kind of behind us. Now it's like Bitcoin's in like a whole new realm of, value interpretation and discovery and such. And Michael Saylor seems much more suited to be the voice box of that. And then, in that effort, these are the assumptions that have been conjured and subscribed to, right?
Yes.
Which is how much? It's a $400 trillion Bitcoin?
$441 trillion.
In 21 years.
In 21 years. So the logic behind that is that Bitcoin is digital capital. And there's real estate. There are these store of value assets out there. And if you take a percentage of each, just like 1 or 2% of each, and you do the math on all that and you add it up all together, then it should be around a $400 trillion asset. And so he says, I think this could occur in 21 years because of this S curve and the network of adoption and all these things, right? And so let's just assume that it's fine, right? So $400 trillion. So that's 4 times more than what we think is reasonable in our own projections, right? And he says it's going to be done in 21 years. So that's less halvings, right?
It's like 5?
5 halvings, right? So let's count 1, 2, 3, 4, 5. So we're removing 2 halvings here. So that's 5, right? So that means that the rate of production of Bitcoin is 0.0976. So 0.0976 times the value of each Bitcoin, which is 21 million. That means you are delivering $2 million per block on Bitcoin. It's pretty good, right?
It's very good.
Yeah. So now
we don't have a problem, right?
Yeah, we don't have a problem. Yeah. So now there is no security budget issue. We're delivering more money today than.
It's kind of peculiar, right? It's like maybe the reason people assume there's no such thing as a problem is because they've heard this dogma.
Yes. Yeah.
From Michael Saylor and friends, and they've already like equipped their mental software. It's like this is what's going to happen, so therefore, anybody saying otherwise,
sure,
they're perpetrating a hoax.
Yes.
Right?
Yes.
So that's like a whole other like a conundrum in itself.
Yeah.
Like the fact that, I don't know, the human mind can be so easily controlled. But it's a factor of what Michael Saylor, again, is a representation of, because he holds so much Bitcoin.
Yeah, I mean, he's got enough conviction to be holding buying almost 1 million Bitcoin.
Yeah, so if somebody who holds that much is saying these things, it's like, he's got his money where his mouth is.
Yeah.
In other words.
Yeah.
If he's wrong, he's going to suffer more than any of us. So
yeah,
in a way, he's a little bit of like a Jesus type. you know?
Yeah.
If he goes down, that's quite the sacrifice, right? So therefore, there's a little bit of like a religious aura going on about this whole situation, right?
Yeah. Yeah. So I think he can be right, but that doesn't solve the issue, right? So assuming that he is right, and assuming it gets to $441 trillion, then a few years later, the subsidy gets halved, and then it gets halved again, and it gets halved again. And what do you think? Is it reasonable to think that a $400 trillion asset doubles in like a short amount of time, like 4 years, 10 years, like?
Well, I mean, if it follows this trajectory, it would be, because that means like every cycle is at least a 50x on average from its previous all-time high, because this is a 400x from like today's valuation.
Yeah, so then you would assume that the little percentage it takes from all the markets that exist for store of value assets, equities, real estate, right? It's going to grab more percentage of that at the same rate. And then eventually it will consume the entire planet.
I think so. I think that's the
Okay, well then if that's the case,
assumption, I guess.
If you believe that it's going to reach 400 trillion and then it's going to go to 800 trillion and then it's going to go to 1.6 quadrillion and then 3.2 quadrillion in like short amounts of time, then yeah, there is no security budget issue. Right? If you believe that. But it seems unlikely for that to occur.
I would agree.
Right? And so, and even if it does get to $4 quadrillion, the subsidy will still get halved. Mm-hmm. Eventually, there will be no money delivered to miners.
Yeah.
Right? And so, and if you're talking about fees supporting a $4 quadrillion asset, we're not talking about $10,000 per transaction anymore. It's like $100,000 per transaction. Mm-hmm. And then, so what? It's $100K. Well, you and I and the people who are watching this are not going to be using Bitcoin if it's $100,000 per transaction.
Right.
Right. And so, okay, well, we won't use it, then the countries will use it. Well, that means that they need to be transacting at $100,000 to $1 million per transaction and fill every single block, every single day, every single year, forever. And then maybe that will secure Bitcoin. And then not only that, if it keeps going up, you need to increase the price of the transaction.
So
we're still not done yet.
I was about to say.
Right. So let's go back to Michael Saylor's scenario. $2 million per block, right? So let's do the math. $2 million per block times 144 blocks that's how many blocks in a day times 365 days. So you're delivering $107 billion, right? Pretty good, right? Well, what is $107 billion divided by 441 trillion? 0.0002%. 0.02% is being used to secure a $400 trillion network.
Right. Not very good. Nowhere near our 3% desired
No,
security budget.
it's 100x difference
Yeah.
plus some.
Yeah.
So even if Michael Saylor is right, we are using 0.02% to secure the network. Like, is that like a reasonable thing to think it's fine? Like, there's no issue here?
So how do you imagine the crowd's reaction when you're on stage at a Bitcoin conference? Yeah.
Bitcoin's going to 100 quadrillion.
Yeah. Get off the stage, sucker.
Yeah.
Something like that, right? Get the out of here, dude. But ultimately, I feel like that's what's needed here, in a sense. I don't know if like we could just keep podcasting about this core issue, and actually hitting the front desks of, I guess, people.
Yeah, you bring up a good point. So we need to kind of like red alert everybody, but I don't think we're the ones to do it.
Yeah. Yeah. In my visions, it was always you on a TED stage, you know?
Yeah.
The way Peter Steinberg. He just had his TED moment.
Absolutely.
He's like, this is how I built OpenClaw and, made $1 billion. I don't know what he said, but I would imagine it's like, here's how.
Yeah, it was just a cool story.
Yeah, with the story we already know, right?
Yeah.
But he's on TED stage kind of telling everyone what went down. So it's like, all right, one day you're going to have to hit that stage, dude.
Sure. And
tell everyone how NAT happened, right?
Yeah, I think, okay, so that's different.
Maybe.
That's different.
Okay, maybe it starts, I don't know. Is it like, do you go on stage to more like sound the alarm bell?
Sure.
Or is it like you're pulled on stage because NAT has happened and it's like, explain yourself?
Sure. I think that is a more reasonable like outcome.
Or is either one of them like negative scenarios, right? Because like I think what you're alluding to is we're not the right messenger.
Well, there's a reason why I say that. So I'm going to explain that. But before I do that, I think it makes sense to kind of explain the thesis of NAT, right? And so again, I'm going to preface this as that it's going to sound a lot like bankless, but then I'm also going to explain why it's not like bankless.
Okay.
Okay. So the solution to Bitcoin is this other token called NAT, right? The solution to the security budget is NAT. So, okay, here we go. It's like, hey, this is where, they plug in their own, like, I don't know, way that they're going to make money, right?
Right. They're bag working.
Bag working. All right. So you've listened this long. Just listen for the next 15 minutes. Okay. All right. So we're saying that the solution to the security budget is this thing called NAT. So I don't want to get into like how NAT formed and all that stuff because that is a different topic. I want to talk about specifically why NAT will solve the issue. So NAT is a second subsidy to Bitcoin. The biggest thing you need to understand about this second subsidy is that it is decoupled from the exponential decay of Bitcoin's subsidy. So Bitcoin halves every 4 years. That is exponential decay. NAT is earned by miners in the same way miners are earning Bitcoin, and it doesn't have this exponential decay. So that's the first big thing. So to set the stage, miners are earning Bitcoin plus NAT as of today. So in the scenario where NAT is being delivered to miners, it is known as the second subsidy. So how does this solve the issue? So as miners are earning this second subsidy using a different mechanic, that means that over time, miners will always be earning NAT. And to paint the picture even clearer, in 2140, when Bitcoin subsidy ends, miners will still be earning NAT. So that's kind of a good thing. And if you go back to the bankless video, the known kind of proposed solutions for Bitcoin security budget is to make Bitcoin infinite, right? So NAT, in a sense, is infinite.
I think I've heard a newer one too, right? Because quantum might happen, it's like let's seize
Yes.
some X amount of Bitcoin, then add that in as new emissions. Or
Sure.
something. It's kind of like extend a little bit.
Yeah,
like
extend the runway for sure.
Yeah.
But that defies the halving event, right? How do you distribute that Bitcoin is completely arbitrary.
Yeah, well, it already is to begin with, but they would just create some new, I don't know, like a patch. It's like what was 3.125 is now 4.672.
Sure, yeah.
I don't know, but that's what I heard. Is like
Well,
another,
even if it is that, then it's
I know.
the majority of the pile is still halving away,
Yeah,
right? It's still decaying.
It's just a little can kick.
Sure, yeah,
That's all it is.
it's kicking the can.
Yeah.
All right, so going back, so man, what was I saying about Bankless here? Yeah, so Bankless is saying, oh yeah, they were talking about the solution is, well, we could just make Bitcoin infinite, and then this would solve the issue, right? Well, making Bitcoin infinite doesn't make Bitcoin anymore, right? It's not Bitcoin.
Right. Yeah.
So the solution to NAT maintains today's Bitcoin. It maintains 21 million. The security, everything is the same. There's no changes to the core code at all, right? So again, miners are already earning this thing to the tune where the top 4 miners have already engaged and sold the asset, and they're already using it, right? So how does this solve the issue? Well, if we agree and use the United States model for security at 3.4%, if Bitcoin ends up being at 100 trillion, right? So let me just copy this value here. So Michael Saylor's number, we're going to use the 100 trillion value, and we're also going to use our own like bullish projection at 100 trillion. So we have 2 values here. These are the 2 projected market caps, and Bitcoin will eventually reach one of these market caps, if not both, right? And what we're saying is we're going to multiply these 2 market caps by the security budget of the United States, 0.034. Okay, so we're going to multiply 0.034 on both of these market caps, and that means that we need to deliver 3.4 million or almost 3.4 trillion or 15 trillion as a market cap for NAT, right? To deliver 3% of the value of the network. Right. So again, I'm saying NAT, let's take the most bullish case. Let's go to the route of Michael Saylor. Michael Saylor is saying Bitcoin will be worth 441 trillion. And I'm saying NAT is going to be worth 15 trillion. So what just happened here, right? That's the question. It's like, you just like multiply 2 numbers, all of a sudden the solution is solved, or the problem is solved, right?
Right.
So what actually happened was I took the value of Bitcoin, the projected value of Bitcoin, and I multiplied it by the security ratio of the United States, which we all agree it is the most secure nation in the world. Okay. So I just took those numbers and I multiplied them together, right? And that means that in order to properly secure Bitcoin at $441 trillion, well, we better be delivering $15 trillion to the miners.
Yes.
Okay. So that means that...
So that they can equip themselves properly.
Yeah.
For defense.
That's right.
Just like the United States military does.
Correct.
Okay.
Right. So now we're delivering 15 trillion, right? So that is the market cap of NAT. So what does that mean? How much money is being delivered to the miners at 15 trillion? So what you do is you divide that by 365 days, divide that by 144 blocks, and NAT is delivering $285 million per block.
That's a good day. Actually, that's a good block. That's a good 10 minutes.
Yes, that's a good 10 minutes.
That's fucking insane. Yeah.
Right? So, okay, now let's kind of remove ourselves from this like scenario. Now you're looking into this environment. Assume that this is happening. If I were to tell you and TJ, hey guys, every block there's a chance that you can win $285 million. What is the first thing you're going to do?
I'm going to go get my mining rig out.
Yes. So as soon as people find out that you could make $285 million in a 10-minute span, everybody is going to buy a Bitcoin miner, whether it's a BitAxe all the way to an ant miner. You're going to install that thing at your house and you're going to plug it in, you're going to turn it on.
Right.
So what does that mean? That means that every house is going to have a Bitcoin miner, however big or small. And what that means is you're consuming more energy because there are more contributors to the network. And when there are more contributors to the network, you're consuming more energy. Therefore, it's more secure. And therefore, the underlying asset is more secure because there's more decentralization and there's more power consumption.
Right. Yeah, what this also means is there needs to be significant, significant thought, I guess, like into how to expand the network effect, I guess is what we call it right now.
Yeah.
Because if you look at that value, that's a lot of like value entering the market every 10 minutes, right? So therefore there needs to be an absorption of that value in order for this to actually be like liquid for the miners, right? Meaning like there has to be insatiable demand for this thing.
Well, think about it.
Insatiable buy.
Well, so we're talking about a $441 trillion asset, Bitcoin, right? That needs to have its own sustainability, right? People need to be using Bitcoin in that scenario, right? In whatever way it is, a store of value or whatever it is, just it has 441 trillion. So what we're saying here is that we need to take that and we just need 3% of it to secure the network. And so there isn't that crazy insatiable amount of like capital requirements here in comparison to Bitcoin, right? It's only 3% of Bitcoin.
Right.
So
yeah, but Bitcoin is not outputting this type of value anymore, right? Because the subsidy's been diminished to like a negligible amount.
Yes.
And in its place, it's now NAT, and it's delivering tremendous value in 10-minute increments. Therefore, there needs to be like tremendous buy pressure availability in those 10-minute increments in order for this to also be sustainable. You know what I mean?
Well, for sure, but you are contributing to the security of the network, and the network of Bitcoin is that much more valuable, and therefore there is a higher incentive to also secure the network. So the network security is equally as valuable, only up to 3% in the case where we're trying to match the United States to the value of the network.
Right.
And so you cannot have a $400 trillion network without its security, right? As we discussed.
Yeah.
And so the security is as valuable as a component to Bitcoin than Bitcoin itself, because you can't have Bitcoin without security.
Yeah. No, I get that. It's just this is more targeted to the people who ask who's going to buy NAT, right? It can't just be people who want to support the security of Bitcoin. There's so few people on earth that even know that needs to be maintained or secured. So there has to be some other verticals of demand that are achieved.
For sure. I mean, there of course there would be a whole ecosystems in the sense of the NAT token, because there's going to be all kinds of use cases for the NAT token because it is underpinning the security of Bitcoin.
Yeah, that's why I bring up the network effect, and really that's where like part 2 of the story kind of comes in, because there's an even deeper layer to NAT than NAT itself, and like what it solves. It's DMT.
Yes,
it's the substrate layer of Bitcoin, which allows like the commoditization of data, and then therefore it becomes applicable in a wide variety of use cases, NAT being one of them.
Yeah.
The first one, and it's working, right? But the idea is to kind of piggyback off of that momentum and create more of like a systemic nature to all of this.
Yeah.
But with the intent of funneling a lot of the value that's created out of that to be the supplementary, like, demand or absorption device or whatever you want to call it.
Yeah, absolutely. Right? Yeah, I mean, it's Jason Lowry who says that Bitcoin is really a power projection tool in the cyber domain, in the same way that missiles and rockets, and that is a power projection tool in the physical domain, right? It's in the airspace and water and land, right? Those are domains that need its own power projection.
Yeah. And
Bitcoin is that, except in the cyberspace, right? And so if the security of the United States is as important to spend 3% of the GDP, then you could reasonably expect the world's money to be as secure as the United States. At least that.
Yeah.
Right. So now let's take a one more step back. Right. So what did I just say? $15 trillion. That's a big number, right? Well, it's not as big as $440 trillion. Yet people believe Michael Saylor. Right. So we're only talking about 3% of Michael Saylor. So let's compare these two numbers. Right. So we have $14 trillion delivering $285 million. And then we have $441 trillion. And Bitcoin's security is 441 million. So, okay, so let me go back. So $441 trillion is the market cap of Bitcoin, and $15 trillion is the market cap of NAT. And NAT is delivering $285 million. $285 million per block. And this is significantly more value delivered to Bitcoin miners than what Bitcoin is delivering to miners.
Yeah, like how much more? Like,
so let me do, it's $2 million.
10x more, right?
Yeah.
Or no. I'm talking about just based on today.
It's 100x more.
Okay.
Right? Because I took Bitcoin's security, right? It halves to 0.09. 0.09 times 21 million market cap is $2 million. So understand what I just said. $441 trillion market cap Bitcoin is delivering $2 million per block. Just 2 million. And what I'm saying is NAT at 15 trillion, right? Just 3% of Bitcoin is delivering 285 million. So which scenario gives you a more secure Bitcoin?
Yeah, the one with the higher subsidy delivery.
That's right, 285. Yeah. That is over 100x more times delivered to the Bitcoin miners.
Right. Than
Bitcoin itself.
Right. Okay. Well, so that again, part 2 is we ran out of time, didn't we?
Yeah, we did. So hold on. So there's one more thing. Sorry. One more thing. So what does this mean? Right, 441 trillion to 14 trillion. That NAT is way more efficient as a security budget vehicle than Bitcoin itself. Right? And so now to the final point is that we can't be the ones saying this because we happen to be the ones who launched this token. Right? We just and again, this token wasn't launched specifically for this. It was a proof of concept. Right. So I don't want to go into like the origin story because it's just a long thing, but this was just a proof of concept that morphed into the solution to the security budget of Bitcoin. So because we have this biased connection to the NAT token, we cannot go to people and say this stuff, even though that this is supported by the math and have people to believe us because we have this connection to the NAT token. So someone else needs to go and explain it to everyone else in the same way Andreas explained Bitcoin to everybody. It wasn't Satoshi doing it. Yeah. It was someone else.
Yeah, I agree with that. I think that makes the most sense. But also, Satoshi did kind of like go away. So there was like no other choice, right?
Yeah.
You know, like Vitalik's out there still explaining things about Ethereum.
Yeah, that's true. Okay, so yeah, I could be wrong. Maybe people will listen to us because we would be like Vitalik, I guess.
We're still alive.
We're still alive, yeah.
Yeah, we're doxxed. We're still breathing. So why not, right? Like,
yeah.
So yeah, plan for it at some point.
Unlike Vitalik though, you didn't have this big pre-mine.
That's true. Yeah.
So going back to just a little bit on the origin story, this token has no VC, no team supply. There's no pre-mine. There's no nothing. There's a free and fair token on Bitcoin using TAP protocol. It is, and the highest, the person holding the most has less than 1% of the supply.
Right. Which there's like a bridge, TAP bridge that holds like 7-8% or something.
Yeah, and that's just a bridge to Ethereum.
Yeah, which most of the volume on chain is happening on Ethereum, at least for now. I guess the idea is to kind of like contribute more on Solana's end once NAT.fund goes live. So yeah, I wanted to bring that up because that is kind of like, NAT solved or not solved, but it proved a lot of things about DMT as like an initial first use case of, Bitcoin as a substrate. NAT.fund is like a proof of concept for this thing we label as the network effect. Cause you've got to recognize, like, if NAT is to fulfill these assumptions, like the amount of ecosystem activity that's going to be needed in order to support that, it's tremendous, right? Because it doesn't have the same scarcity implications of Bitcoin. Therefore, people won't just pile into it because they think, there's only so much of it to go around.
Sure,
So there's a different dynamic to NAT than Bitcoin, and it's going to be much more subjected to, I think, Reed's law, right? Which is the thing where there has to be like subnetworks connected to a network of subnetworks, basically, in order to like experience this exponential growth of like the parent asset in a sense. Yeah. And NAT.fund is basically, contingent on like a successful application of like bringing Bitcoin substrate data layer abroad, in this case to Solana, and building like an actual sensible creator ecosystem around that's generating churn, that therefore brings in more supplemental value to NAT itself. Yeah. And like, addresses that dynamic shift between Bitcoin and NAT, right? That is like a first proof of concept, because if it works, we're pretty confident that it will. Yeah. We spent a lot of time and effort into like building something novel, not just out of DMT itself, but like even at the application layer, right? And because we're entering like a competing arena with Pump, and now what's it called, Printer. It's getting a lot of traction. So there's an ecosystem, a launch ecosystem that is ripe for disruption, right? Yes. And so we're going to enter the market very soon with this product. And again, it's similar to NAT in a sense that it's a whole brand new concept. Like NAT is a brand new token concept, NAT.fund is a brand new launch concept. Yeah. Right. But again, all of it is connected to NAT. So I mean, it's a little similar to us launching NAT and the original DMT, Git book. It's a whole new starting point to a whole new journey, right? Yeah. And that, if you've been watching, we've been saying it's coming next week, and then next week, and then next week. So at this point, we're kind of like cutting ourselves off from this like loop of like expectation. I think from this point forward, the next time you're going to see us is going to be like a video that's announcing the launch of it. I think that's the healthiest thing to do, to kind of like stop this, like, built up. Or just like, when is it coming? Right. Well, the next time you see a video from us, know that it's live. Right. Yes. Yeah. So the next video means that the next video after this one means that NAT.fund is live. Right. So do with that information what you will. Yeah. It should be an interesting time. If you remember the good old mScribe launch days. Yeah. Hopefully it's like that in some aspects and not like in others. Yeah. Hopefully it's like, because mScribe launch was a very like magical thing. It was very cool. Again, another new experience we put into the market. That's right. People really loved it. They thought it was awesome. But, it came with its little shaky moments like all launches do. So expect that. And we're definitely excited to show off like what we've been up to. Yeah. And join the Discord. I think that's the best thing you can do to kind of like really get, because we're going to try and coordinate the announcement wheel. It's like, Discord announcement, probably in Telegram, YouTube posts. Hopefully it all gets shotgun blasted at the same time. Yeah, for sure. That's the best way to kind of like know when things are going to drop. Mm-hmm. And so again, the Discord, the Telegram, which is growing really fast. Yeah. There's almost like 3,000 people there. Right. For the NAT token specifically, but Telegram is growing. Discord, these are going to be the fastest way you're going to know when things are happening and dropping. So, we're here for the creators. We want to support the ecosystem. We're here for Bitcoin. For sure. We're here for a lot of things. Bitcoin, because we think it's genuinely cool. We think it's something that's, I don't know, the most interesting like way to do crypto. We've been in crypto long enough. We've seen it all. And if you watch like Kobe's latest, not Kobe Bryant, Kobe, the crypto Twitter influencer's latest podcast with Thread Guy, he was talking about, hey, what's your secret sauce? Yeah. How do you discover like, new verticals before everybody else? And to him, it's simply just try and find like the weirdest things in crypto and just give it a shot. Like don't, because typically people's gut reaction is to like stray away from new things.
Sure.
I don't know why. It's just a human behavior trait. But the way to actually find like early access and success in these markets is to not fall victim to that instinct. Instead, you know, ask yourself like, you know, what? Yeah, this, as weird as this might look like, it might be. Well, what would actually happen if it does work, right? And that's his mental model when he approaches, you know, novelties in the market.
Sure.
Which leads you to find, you know, things before everybody else. And we're kind of the same way, right? We've been operating like that on this channel for 7-8 years now. So so this is genuinely a new weird thing in the market. I think a lot of you guys will agree.
And then that's kind of what we do. We make these predictions and we see if we're right. It's sort of like what scientists do. They come up with this theory of like why the math makes sense, and they all of a sudden go look for that thing based on like what the math says, and then they find the thing. That's how they found black holes. Right. But before we go, I want to make a correction here. So I said $15 trillion would be the market cap of NAT if we reach 3% parity, right, with Bitcoin at 400 trillion, right?
Mm-hmm.
So if you go to natgmi.com, there's like this helpful slider that goes only up to $1 trillion.
Right.
Okay, so if it goes up to $1 trillion, but there's this number here. It says theoretical USD value of NAT per block. At 1 trillion, we're delivering $1 million per block. So all you have to do is multiply that by 15, and we're delivering $15 trillion per block. Sorry, 15 million per block.
Okay.
So 15 million per block compared to 2 million Bitcoin.
Yeah.
So it's a 7x difference.
Okay.
7x the efficiency of Bitcoin.
Yeah. How much is that in a day? 15 million times 144.
So 15 million. 1 sec.
Yeah, that's what, like 3 billion? I'm just gonna do like a quick brain math. Sounds like 3 billion.
So 2.1
billion.
2.1 billion per day.
Jesus. Dude, talk about
2.1 billion per day.
Yeah. So that's the goal.
Like I feel like everyone who's in Bitcoin wants this to happen. Yeah, they want this degree of security because now it is the thing that cannot be defeated.
Yeah, in other words, if you care to develop or contribute to Bitcoin in some end, as we have been doing, it should be your underlying motivation and goal to build things that head us into that direction, right?
Yes.
Like that is the ultimate way to contribute to Bitcoin.
That is what nat.fun is.
And NAT and all these things. DMT, all this. It's directed by that ethos.
Yeah.
Right?
Yeah. All right. That's it. So just rerun the math, dude. You know, don't listen to me. Just try to do this math on your own, and you will come to the same conclusion. Why? Because it's math. Mm-hmm. Like we can speak a million different languages, and math is a language that everyone speaks.
Yeah.
All right. So that's it for us. If you have any questions on the NAT token, nat.fun, let us know in the comment section below. The next time you see a video, that's when this thing's dropped.
Yeah.
And I appreciate you, and we will catch you in the next podcast.
Peace.